Have you ever wondered that you could create a wealth of 29.73 crores just by investing rupees 1000 per month in SIP? Yes, it is possible. Hello, I am Nilesh Bodhi and you are watching Motivated Life Coach. And today we are going to see how we can create a wealth of 29.73 crores by investing rupees 1000 per month in Canara Robeco Small Cap Fund. Let us have a look at the fund overview. So this is basically a small cap fund. The net asset value is 25.02. The asset under management is 2024.42 crores. There is no lock-in period in this particular fund, but the exit load is 1% if you exit in 365 days. Now the expense ratio is 0.48%. Expense ratio is an annual maintenance fee levied by the mutual fund to meet its expenses. This includes annual operating costs including management fees. Okay. As per Discometer, this is a very high risk fund. If you see the returns, then in 1 year it has generated 61.60% return, whereas in 3 years it has generated 34.80%, and since inception it has generated 34.30% returns. Mr. Ajay Khandelwal, who is MBA and Bachelor of Engineering, is managing the fund since December 2021, and Mr. Sridhar Bhandwalkar, who is BE Mechanical and MS Finance, is managing the fund since 1st of October 2019. Let us now see the portfolio allocation of this fund. So if you see, there are total 58 stocks in this particular portfolio. If you see the allocation by market cap, then this being a small cap fund, it is still investing in large cap and the percentage is 2.58%. In mid cap, it is investing 39.71, whereas in small cap, it is investing 51.57%. If you see the allocation by sector, 18.38 is the percent in financial sector, 15.3 in services, 12.36 in materials, and 11.21 in capital goods. If you see the top stock holdings, then 3.21% is invested in KPR Milk Limited, 3.04 in Sefer India Limited, 2.63% in Canfin Homes, and 2.59% in Serra Sanitaryware Limited. Let us now see the performance of this particular fund. Okay, so the performance is judged by few parameters, and those parameters include standard deviation, beta, Sharpe ratio, and alpha. So what is standard deviation? It indicates how volatile the fund is in terms of return. Okay, the standard deviation of this fund is bit more than category average, indicating more volatility in nature. Beta is a measure of volatility. It tells us how risky the fund is when compared to its benchmark. These funds beta has high volatility when compared with category average, but since it is less than 1, it is less volatile compared to the overall market. Sharpe ratio of any fund tells how much risk adjusted returns that fund is able to give. It tells us the ability of the fund to generate more returns by taking less risk. Higher the Sharpe ratio, better is the fund. This fund Sharpe ratio tells us that it is generating more returns, taking less risk. Alpha is the excess return over and above the benchmark return on a risk adjusted basis. These funds had generated return over and above the benchmark. If we compare Canara Robeco Small Cap Fund with Nifty Small Cap 250 TRA, we can see that this fund has always beaten the benchmark. Okay, so it is performing really very good, and hence it is giving very good returns as well. Let us now see the downside protection of this particular fund. This fund has 93.91% investment in Indian stocks, out of which 2.58% is in large cap, 39.71 in mid cap, and 51.57 in small cap. So this fund is managing the portfolio diversification by investing in both large cap and mid cap stocks. Why? Because when the market falls, large cap and mid cap does not fall much as compared to small cap. This is how the fund is trying to balance the portfolio. Also, this fund does not change the stocks very often and holds for long term, due to which the fund is able to manage lower expense ratio. So as we can see, when the market is falling much, this fund is not falling compared to its benchmark. It is always giving good downside protection. It is only giving positive returns when it compared with the benchmark. As we can see, when the market is fallen by minus 1.29% in 3 months, it is still in positive, that is 5.20%. Whereas in the YTD, when the market is fallen by minus 4.33%, it is still in positive 2.51%. So this is how this fund is not only giving good returns but also doing portfolio diversification and giving very good downside protection. Let us now see if we invest 1000 rupees and if we can just consider only 30% return, whereas this fund has given 34.3% since its inception, but we will consider for calculation purpose just 30% returns. Okay, so for 5 years if we invest 1000 rupees, it would be 60,000. the estimated returns which we can expect is 79,391. So the total, that is invested amount plus estimated amount, becomes 1,39,391. For 10 years, our investment would be 1,20,000. Estimated returns would be 6,32,684, and the total would be 7,52,684. In 15 years, the investment would be 1,80,000. Estimated returns would be 32,71,043, whereas the total would amount to 34,51,043. For 20 years, the investment would be 2,40,000. The estimated returns would be 1 crore 50 lakh 83,257, whereas the total, including the invested plus estimated, would be 1 crore 53 lakh 23,257. In 25 years, the investment would be 3 lakhs. Estimated returns would be 6 crore 72 lakh 58,499, whereas the total would be 6 crore 75 lakh 58,499. And in 30 years, the invested amount would be 3,60,000, estimated would be 29 crore 70 lakhs 22,581, and the total would amount to 29 lakhs 70,000 82,581. So as we can see, if we invest 1,000 rupees for 30 years, then the total return which would expect is 29 crore 73 lakh 82,581. Now even if we consider 50% of this, still you are in profit, right? If we invest 50,000 as one-time lump sum amount in this fund at the rate of 30%, then in 5 years our investment amount would be 50,000. The estimated returns would be 1,35,647, whereas the total including the invested amount plus estimated would be 1,85,647. In 10 years, the invested amount would be 50,000. The estimated would be 6,39,292, whereas the total would be 6,89,292. In 15 years, invested amount would be 50,000, estimated would be 25 lakh 9,295, whereas the total would be 25 lakh 59,295. In 20 years, invested amount would be 50,000, estimated would be 94 lakh 52,482, and the total would be 95 lakh 2,482. In 25 years, invested amount would be 50,000, estimated would be 3 crores 52 lakh 32,050, whereas the total would be 3 crore 52 lakh 82,050. In 30 years, your invested amount would be 50,000, estimated amount would be 13 crore 9 lakh 49,782, whereas the total including the invested and the estimated would be 13 crore 9 lakh 99,782. So you can just invest 50,000 lump sum in this fund and leave it there for at least 30 years, and you could make a very good profit, which is 13 crores. Now let's say you are doing an SWP, which is a systematic withdrawal plan, via which you are investing 25 lakhs in this fund with the monthly withdrawal of 12,500 per month at the rate of 30%. So your investment would be 25 lakh for 5 years. Withdrawal amount would be 7,50,000, and the total would be 77,48,171. In 10 years, invested amount would be 25 lakhs, your withdrawal would be 15 lakhs, and the total would be 2 crore 72 lakh 34,264. In 15 years, invested amount would be 25 lakhs, your withdrawal would be 22 lakh 50,000, and the total would amount to 9 crore 95 lakh 84,762. For 20 years, invested amount would be 25 lakhs, your withdrawal amount would be 30 lakhs, and the total would still grow to 36 crore 82 lakh 17,096. For 25 years, the invested amount would be 25 lakhs, the withdrawal would be 37 lakh 50,000, and the total would be 136 crore 56 lakhs 30,147. For 30 years, your invested amount would be 25 lakhs, withdrawal would be 45 lakhs, and the total would be 506 crore 89 lakh 54,989. Really? So that's how the power of SWP is. Okay, so this fund is really great. Even if you expect 50% of this 506, you're still in profit, right? Thanks for watching. Note: mutual fund investment are subject to market risk. Please read all scheme related documents carefully. If you are looking for a life coach or mentorship or wish to invest in mutual funds, then please fill in your data by clicking on the below link. You can also email us at bodhifacilities@gmail.com or contact us on 7349701701. Please don't forget to like, comment, share and subscribe to our YouTube channel. See you in the next video. Till then, take care.